Sometimes I get those comments below my video that I'm completely paranoid, that actually all the price discovery in crypto is completely natural, that there's very little manipulation, and that I make this whole topic way bigger than it actually is. But if that's true, how can we explain price rallies like with ConstitutionDao or the People token? I think this is a prime example of price manipulation. Today we are up almost 60%. This week we are up more than 150%. And this month we've almost tripled in value. And that's happening to this project here. A project with 74,000 followers on Twitter. Seems fine, right? But does it really? ConstitutionDao is a project that has already shut down years ago. Refunds are now available. This was a project that tried to buy the original papers of the Constitution via a crowdfunding campaign. The minimum amount that was required to be raised was not raised, and so the people just got refunded and the whole thing shut down. Now that does not mean that there is no holders of the token, right? On the Ethereum chain there are still almost 20,000 holders. To be more specific, it's 18,810 with a growing tendency. Now in the last month though, we saw way more returning users than new users that interacted with the token. So on pretty much every day, the ratio of returning users versus new users is 90 to 10 roughly. And again, that's happening while the price almost 3x's. Have a look at the number of buyers and sellers over time since inception of the token. Initially, there was way more interest than today. The number of buyers and sellers tends to decline over time. The ratio of buyers to sellers per day stays somewhat constant. So what is then triggering this rally? Let's have a look at how many retail investors there are versus how many whale investors there are. The way we can make this distinction is by just looking at the wallet size, as in how many tokens are held in a particular wallet. We're going to look at retail investors that have roughly $1,000 worth of the token at minimum. We're going to look at the whales that have at least $100,000 worth of the token. So you can see that data over here. It's a minimum holding of 30,000 tokens on the left, 300,000 tokens in the middle, and 3 million tokens on the right. So it's small retail, medium-sized retail, and the whales. Now we can clearly see how there is no accumulation at all in the last few days. Retail tends to sell, the whales aren't buying either. The price is pretty much a roller coaster over time, but the number of holders is not necessarily. And so what could be going on here? I think it's leverage. I think there are bets on the market through the perpetual futures. There are people that bet on the price to potentially liquidate the shorts. So check this out. This is the trading volume on various exchanges in the last 24 hours. And this is led by Binance. So not a decentralized exchange, but everything in black boxes. There was 127 million worth of trading volume on the spot market. Now there's also the perpetual futures market. And here we see much more trading volume, more than $500 million in the last 24 hours. So it's all short-term bets that are moving the price. The trading volume on the decentralized exchange was only $245,000 with only 64 wallets interacting with the token. So there's pretty much nothing happening on chain. The perp market determines the price, the spot market on the centralized exchanges follow, and a few arbitrage bots then balance out those prices with whatever happening on chain. But that then begs the question, right? How much higher can we go in the People token? If this is currently manipulation, how much can we expect the price to continue to stay manipulated? Now what we see over here is the open interest weighted funding rate. So this is how much people now pay on the perpetual futures market in order to long or short the token. And most of the time this is positive. In other words, the longs have to pay the shorts. Most people bet on rising prices, and that's true for most cryptocurrencies most of the time. Now, if this was very, very negative, this would actually be positive for the price, because that means there is more likelihood of an upcoming short squeeze. But it seems like the market is still somewhat balanced. What we're seeing over here is the open interest in green. So that's here this left scale, and the price of the People token. So there's clearly a connection here, right? The more open interest there is, the more people bet on the price, the higher the price goes. And whenever a price rises, we tend to see more liquidations. Now, as said, currently the market seems to be somewhat balanced. But if suddenly people bet on falling prices of people, we might see more manipulation to the upside. Because fundamentally, this is how this works. Binance probably holds most of the people token. At the same time, they also offer bets on the price. Now, if a lot of people bet on falling prices, they can manipulate the price upwards because they've got all of that supply. So Binance is basically like a sports betting house that offers bets, say on the soccer match. At the same time, they've also bought the referee. They've got an impact on the price. You are offering bets on something, but at the same time, you can say what the outcome of that bet is. So it's a direct player versus player game. It's small retail versus the heavy market makers. And so here's potentially what we can use as a reference, because there is a limit to how much a token can be manipulated, right? At some point, it becomes too expensive to push the price higher. What we've got over here is the historical price of people, or of ConstitutionDao, relative to wrapped Ethereum. So it's always important to look at relative performance within crypto. The US dollar price doesn't really matter. All that matters is the ratio of prices relative to the leaders, Bitcoin and ETH. And we have been trading in that range since January 2022. And currently, this year is what our rally looks like. Now, I'm currently not betting on either direction. But if people continues to go up by another 200% potentially, and we are reaching those higher trading ranges again, at that point, the manipulation is probably exhausted. Could we turn around right now? Yes, definitely possible. But very often, we also get secondary short squeezes. So a price goes up, a lot of people get interested in the token. They might bet on falling prices. When enough people bet on falling prices, the market maker continues to manipulate the price up. Then again, there might be more people, again, betting on falling prices. And the cycle continues until all of the short sellers that have burnt themselves are out of the market. And that's then when the price tends to decline. And so I am waiting for that scenario. We are neither extremely cheap nor extremely expensive in people. And there is a good chance for another doubling and tripling. But after a tripling, I think it makes sense to rather be bearish. So at least at 9 cents per people token, it's time to get out, in my humble opinion, right? Just based on history and based on what other cryptocurrencies did in similar situations. Now, here's something very important to understand. Crypto is highly correlated, as in when the market tends to go down, everything goes down at the same time. There's very little variation. This is true for the bear case, but it's also true for the bull case, as in most things go up at the same time. There seems to be not so much benefit in diversification, as in it seems to not really matter what kind of token we buy. If we have 5 tokens or we've got 20 tokens, the portfolio tends to move in the same direction anyway. Now, the reason for those synchronized ups and downs in the market cannot just be money flows, because the money is flowing in and out of the overall space relatively consistently with little volatility. What we've got over here is the stablecoin market cap. And since October of 2023, we tend to go up over time. So there is money getting into the system. People deposit their fiat currency, say on a centralized exchange. The centralized exchange then sends it over to a stablecoin custodian. The custodian holds the funds in a bank account and then mints the stablecoins on the chain. And we can see that minting, but also the redemption on this chart. So the volatility that all prices go up or all prices go down, it's not caused by money flowing in and out of the system as a whole. Instead, I believe it's caused by the swapping activity. So people going risk on or going risk off. So it's not the market as a whole expanding or contracting, it's the participants within the market that swap. And we can see that swapping activity with much more volatility here. So this is now the stablecoin dominance. We're not looking at the stablecoin market cap, we're looking at the stablecoin dominance. How much of all of crypto is in stables? And in the last 1.5 years, this tended to move in a range between 9% and 5%. And now compare that stablecoin dominance with the Bitcoin price. When the stablecoin dominance is low, it means the Bitcoin price tends to be high. when the stablecoin dominance is high, it means the Bitcoin price tends to be low. So there is somewhat of an inverse correlation. When people deploy their stablecoins, or when they're swapping from risk off to risk on, when stablecoin dominance goes down, prices tend to go up. And so because of that overall effect of market synchronization, because of the high correlation, things move in the same direction at the same time, it's not a good idea to just look at US dollar prices in order to make a good decision whether or not to buy or sell an altcoin. Because charts like this are also influenced by the overall market swapping activity, not just by the swapping activity within the altcoin. So for example, this here, right? This is Dogecoin. And who would have thought that Dogecoin already peaks at 46 cents when in the past it peaked at 56, 57 cents? Who would have already anticipated the peak earlier? How could we figure that out? Here is how we can figure that out. This is Dogecoin's dominance. And here those two tops align very nicely. And so a dominance chart is simply a chart that looks at the current market cap of an altcoin relative to all of crypto. So that way we remove the ups and downs of Bitcoin or of Ethereum. We're just looking at the relative performance of the altcoin versus the rest of the market. And again, that tends to trade in ranges. And that's how we can find out how the second peak should actually happen earlier in US dollars, because the dominance was already at historical heights. But check out this, right? This is Shiba Inu in US dollars. But here's Shiba Inu's dominance. So we do have a quiet, constant trend. Over time, Shiba Inu tends to underperform the rest of the market, and when we are high on the trading range, it might make sense to bet on falling prices. When we are low, we could potentially buy, but of course it's always somewhat risky to buy low when the overall trend is also bearish. So I personally prefer, when there's a declining trend, to look for short opportunities, so to bet on falling prices when we are high, and when we are in an upwards trend, to buy the dips. So when we are in a bull market, we buy the dips. When we are in a bear market, we short the top. And so Shiba Inu underperforms the market over the long term. So instead of trying to fish for bottoms here, isn't it better to just wait for the next short squeeze, to wait for the next rally in the price, to then bet on falling prices? Then the time is also on our side. Even if we see a bit of a spike above the regular trading range, we can just wait it out, because the overall trend is in our favor. That's not necessarily true when we buy, right? When we buy low in a declining trend, we might not find the exit on time and then have to sell again, potentially lower. Another example, here's Chainlink. And what we see over here, that's Chainlink's dominance. So just according to this chart, it might make sense to potentially buy some Link over just Bitcoin or Ethereum. Historically, it's rather cheap. Now, there are two central reasons why I like those relative valuation charts and those dominance charts. The first one is that we can actually see what happens specifically with that token, completely independent of the overall market. But the second reason is by plotting relative valuation charts, so say cryptocurrency A versus cryptocurrency B, we tend to see less volatility. We tend to see the trends clearer. For example, over here, this is the Ethereum price in US dollars since February of 2021. There's no clear trend. It's not necessarily easy to figure out when to buy or when to sell. But then we've got here Ethereum relative to Balancer. I like to look at this chart because it gives us two nice points. First of all, the overall volatility is rather small, but secondly, the gains are also extremely consistent. So this is an outperformance of 5,400%. This is how much Ethereum outperformed Balancer. And again, relatively speaking, with not that much volatility. Getting that much performance in a such consistent manner without having to time the market actively, that's quite unique, right? This is a risk to reward that we can only get with relative valuation plays. We can't get this just by buying something in US dollars. And again, the reason why everything in US dollars fluctuates so much is because the market as a whole goes risk on and risk off all the time. And that creates massive additional volatility. But we can get rid of that volatility. We can actually make money by buying this. Now, we don't just buy this, we have to set up a long Ethereum and a short Balancer position. So to get this performance, we have to do a bit of quote unquote financial trickery. But yeah, why do we see such consistent outperformance? The reason is that Balancer over time tends to have an expanding token supply. And a lot of that additional supply goes to liquidity mining. So to a lot of people that just get continued allocation to the token that then sell it off over time. And so this then differentiates the winners from the losers long term. The people that are willing to take one step further, they're going to look not just at the next 100x meme coin, it's likely going to go to zero, but that actually figure out what are the dynamics within the market and how can we profit from those dynamics. Those people tend to do better than just the people that buy and hold Bitcoin, for example. I have made dedicated tutorial videos on the topic. First of all, how do we even plot those relative valuation charts? How can we look at them? There's an entire tutorial section just on how to use TradingView in a proper manner and seeing the things that most people don't, right? Most people just look at things like this. This is not giving us any edge. But then there are also videos on how to actually execute those trades. How can we gain from relative valuations? How can we set this up? How can we continually make money with comparatively little risk? Now, most people here on YouTube are not willing to share their own performance, but I'm okay with doing that. I'm okay to share how much money I'm making on average over buying and holding Bitcoin. Because this is again where the big differentiator is. Everybody can get Bitcoin's performance, but actually the art in this is to make more than Bitcoin. If we take the time to trade actively, we have to outperform the benchmark. Now here are the monthly returns that I have made over buying and holding Bitcoin. So every data point is a month. This dotted line here is the 12-month moving average. And when we average out all of those dots, the monthly alpha over buying and holding Bitcoin for me is 2.1%. Now that might not sound like much, but that compounds over time. And then especially if we also add more money in the portfolio over time, we dollar cost average in, we have a quite nice smooth growth curve. So here's my active portfolio with trading and dollar cost averaging. And I hope that over the next 2 to 2.5 years, I'll be able again to double that portfolio. If we of course use leverage, we can make much more on a single trade. But I'm super cautious. I take very small bets. For example, have a look at this. I'm sharing my own trades. This is in the Gerhard Trade channel, and I opened again, based on relative valuations, a short of the Donald Trump meme coin. Trump relative to Solana was quite high, and it started to come down. And then our members also entered. They also had some leverage in there, so this was some gains. I waited a bit longer, closed this then at 141%. But because I only use 1 or 2% of my entire portfolio on a trade like this, the average alpha per month is only 2.1%. But if you're willing to take on more risk, you can of course grow much faster. Actually, our members do exactly that. So here's the channel, share your wins with some leverage and proper market timing and still reasonable risk management. There are several 100% in single trades easily possible. And so I think it's very important to forget about price targets, as in can Ethereum hit $4,000 or can Dogecoin hit $1, etc. Those kind of things don't really matter. What really matters is the relative performance. Capital within crypto moves from asset to asset. Attention moves from asset to asset. So there is all of the capital in the space. Sometimes it is risk on, sometimes it is risk off. But what really matters is where is the capital flowing to and where is it going away. And then all we need to do is to trade the relative valuation. It's much easier to make money that way. Again, would you rather hold this or would you rather hold this? And so yeah, feel free to check it out. It's currently $125 per month. You are locking in that rate. So when we come back to the 165 again in a few months, then you will still continue paying the 125. Whatever you're paying now, you will continue to pay. I will not increase the rate for everybody that's signing up now. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. There should be also somewhere a pop-up here on the right where you can click directly. It will lead you to the website. So see you over there. Cheers.